wanted to get this straight. So, the views expressed in this podcast are for informational and educational purposes only and should not be considered as financial or investment or legal advice. The opinions shared are those of the speakers and do not necessarily reflect the views of their employers or affiliated organizations. Please do your own research or consult a professional before making any financial decisions. Cool. Everyone is aligned. All right. So let's get started. So just wanted to start off with what's going on in the news. As you're all aware, there is a lot of unrest going on in the Middle East. So Terry, would you like to share your thoughts about what's going on and how that could impact us essentially in terms of our economy? And of course, yeah, feel free to share your thoughts on how this could impact our oil markets and yeah, and also inflation and interest rates in general.
Yeah, no, sure. I guess a secondary disclaimer that I am not an expert on international relations or trade markets and all these things, but yeah, obviously, you know, loss of life is a tragedy, and there's a lot going on with that. More important than the market impacts, but yeah, the market impacts are pretty significant. I think everyone saw pretty red days yesterday, even more so today, kind of across the board, but more so on international markets. I think VXUS was down like 3 or 4% today. So pretty big impacts there. What I was seeing is like pretty big disruptions from like the Strait of Hormuz, I believe is how you say it. It's just like 20+% of global oil, 25% of natural gas goes through that choke point and has essentially been halted. So pretty significant, and also obviously like I think one of it doesn't feel like the right word to call it interesting, but like one of the big things is like how broad Iran's retaliatory strikes are and like targeting like Dubai's airports. Um, obviously like shutting down global travel from like an extremely active international airport. So yeah, it's pretty serious. I'm not sure how much longer like actual back and forth strikes are lasting. So I think like there's a lot of volatility priced in. But yeah, I don't know if you guys have more thoughts on it as well. But that's like the gist of what I've been seeing. It's just volatile future.
It
Yeah,
definitely spiked recently, but I feel like we're still at, you know, reasonable prices, historically reasonable prices.
Yeah.
I also heard that there could be some disruptions in some of the routes that the cargo ships could be taking to export oil. So
Yeah,
I don't
that's
know
true.
how much of impact that'll have in terms of our oil reserves. I heard that we should be good for about 20 days or so from an oil reserve standpoint. Yeah, but yeah, it'll be interesting. So,
I
all
mean, the
right.
US has a lot of oil that we produce, so
Yeah,
I'm sure it'll impact us, but we're more and more independent for sure.
that's
I
right.
definitely don't see the kind of panic in the markets that you might expect. It seems like it's kind of priced in to me.
Yeah, I mean, it did like take a pretty big hit though. Like, I wouldn't call it like panic, like we're not seeing like double digit declines, but like overall market's like pretty down for a lot of people. Like, I don't know, I feel like if
The
you're in like
market or
more
oil?
volatile, well, yeah, oil specifically, but I think like maybe not as much, but like I don't know what your portfolio is looking like, but like I think like I don't know, like I'm just looking at like I don't know, just like a VT, world
hmm
index is down like
Volatility
2%.
index.
I think
Yeah.
like 2% is a pretty significant daily drop. The Dow is no longer over 50,000. So I see that as significant.
Yeah, that was definitely a top indicator. I pulled up oil here. I was tracking markets today, and obviously Monday was a down day, and then kind of rebounded. Today was a little bit of the same. So ended up down, but oil was it closed lower than the intraday high. Trump had a big meeting today, and he um kind of calmed a little bit of the fears, it seemed like, at least for today, with regards to maybe providing some military support to guide the tankers through the Strait of Hormuz or Hormuz. Again, I can't pronounce that either. So yeah, so it seems like there's definitely unrest in the markets on the tech side. Energy side is obviously benefited, and then of course, as always, defense, um, or what I would call defense stocks, but may or yeah,
Like war stocks now.
war stocks now,
In
yeah,
the
are
label.
definitely are a more appropriate title. But yeah, those have obviously been up. Yeah, like Raytheon and Lockheed Martin. So there's definitely yeah, trade there on yeah, that this could be prolonged within the Middle East.
Have you guys heard anything on like I was reading something that like Trump kind of said like not as like an actual policy or an announcement, but like, oh, we're stopping trade with Spain. Did you guys see that as well? Because
Yep.
they like
That's a
won't
new one on me.
Yeah, that was same press conference I was watching today. I wanted to actually take a screenshot, but I couldn't. There was so much gold in the background of the Oval Office. It was a little hard
Yeah.
to stay
The
stay
Golden
focused.
Office now.
Like, yeah, the Golden Office. It was him, and I believe the president of Germany or prime minister of Germany was yeah, they had a little bit of a roast sesh on Spain. They want them to spend more because of NATO, and yeah, so there was a target, definitely a little bit of a targeted speech there.
Yeah. I'm wondering though, like in terms of markets, like I don't know, I think a lot of things like keeping it apolitical, but like Trump has moved the markets before down and then kind of reversed on decisions and then it roars back to where it was. I do wonder if like certain like Spanish companies or stocks will be like negatively affected by like, the potentiality of, oh yeah, we're just going to halt trade. And then if it's like, a revelation of like, oh wait, that's illegal, we can't do that, or like they're part of the EU, you just cannot do that. Like if NATO gets in the way of that, but yeah, like I think I don't know, there might be a play there. Not much of a day trader, but I think we could see some
Not
downward
yet.
effects in yeah, no, a few of these sessions and we'll see what happens in the Roth. But I think I don't know, maybe Spanish downturn in the morning, pick up end of week, it reverses when Trump's like, oh, it was a kid, I was just kidding or something. So we'll see.
Do you guys have an opinion as to why, in spite of US having so many oil reserves, we don't tap into that? I know Texas is heavily uh like it has abundant of shale reserves, right?
We have a lot of oil now in the US. Like we didn't um we I mean Texas was always, oil, and there's oil in California too. But we consume massive amounts of oil. The amount of oil we consume has always been, much more than we produce.
Yeah.
But a lot of that has changed in the last, I think it's like 10 years, since fracking in the Midwest. And now we're the biggest producer of oil in the world, and honestly, I don't think it's going to stop. So it's changed a lot of our relationships with oil producing countries. We still consume so much that we want their oil, we want everyone's oil.
Yeah.
And there's a strategic reason to hold oil everywhere you go.
Yeah. Yeah, lower
Yeah.
prices are lower prices, so it's like even but yeah, I wouldn't say like, oh, like why isn't the US like tapping it? I think the US is tapping in. I also don't think this conflict is like about the US seeking oil. I think like the supply shocks are like negative impacts on oil, but it's not like an oil, like it's more of like, a regime change scenario. Like say what you will on like there's protests of the change of the regime, but also like celebrations. So like as with any country, like there's going to be mixed views, but it's a regime change push, not like a an oil grab. But it's definitely affecting the oil like markets with like the straits kind of clogging up. So that it's more of an after effect, not a cause, in my opinion.
Yeah. I did a quick Google search through Wall Street Journal on oil, just oil production because I remember there was an article a few years ago. It talked about the fracking and how they couldn't keep up the same rate of production because they would essentially like run the oil fields dry. So there is like a limited supply and they kind of want to keep the margins, it seems like. But a couple headlines popped up the past few weeks. Maybe the market always knows or someone always knows this invasion seemed like it was kind of telegraphed for a while, but there's one from 6 days ago and one from February 11th, Wall Street Journal, similar articles, um, both titled U.S. crude oil stockpiles post large weekly build. So yeah, oil prices have been rising for a few weeks, it seems like, and at least on the commercial side, it seems like people were trying to get ahead of that potential increase, and that always flows through to producer prices and then eventually to consumer inflation. So that's kind of interesting to see. I just Googled that on the side, and it seems like there was some commercial stockpiling, but it doesn't mention anything about the strategic reserve.
Let's talk a little bit about energy because since we're talking about oil, I mean, the reason being that it's a prime source of energy. So, what are your guys' thoughts about renewable energy? And also, I'm starting to hear a change in PR on how nuclear is perceived, right? So like at least growing up, everything I heard about nuclear is, oh, it is unsafe. But now I'm starting to hear it's not as bad as people think it is. Of course, there is risk that comes with radiation, but if controlled properly, then it should be a good source of energy. And we see China ramping up their nuclear capacity. Just curious to hear your thoughts on decoupling from crude to meet the energy needs.
Yeah. I have a lot of thoughts on this, though. I have I would have had a ticker recommendation, though I'm not a financial advisor. As of like a week or two ago, I have a darling stock, AES Corporation, real big on it since May of last year. Got in around like $10 a share. I like the price to earnings of 9. I'm a bit of a value investor, so it was cheap. And then, it kept rising over the last few months. And the thesis basically being like data center build outs, they need energy. They're big on clean energy. They've recently gotten some like power purchasing agreements with Google within the last couple of weeks, like multi-year power purchasing agreements. Like we're going to build these clean energy power plants, wind, solar, whatever, to fund your data center build outs or to provide the energy to it. So very bullish. But then BlackRock came in and they're buying them. So it had risen from $10 to like 17. So I had a nice 70% gain, but then BlackRock came in and was like, actually, we've agreed to buy them for 15. So the stock tanked down to like 14.50 after. Anyway, I think there are plays like that exist, like clean energy for like data centers is one thing because it's just such a limitation. People are focused on the hardware, but like energy will always be like the original shovel, if you will. Got need to have power for everything. On the nuclear front, I think with the US and nuclear build outs, a lot of it's also like bureaucratic issues. Like I read the book Abundance. It's a Ezra Klein piece, and they talk a lot about like this as a general thing, but like bureaucracy gets in the way of nuclear build outs a lot more. Like China is just, kind of sign off. We don't want a nuclear facility. Let's go. It just releases steam. There's no actual, no carbon footprint on it. Again, there's that risk of, it's either a disaster or there's no carbon footprint. There's kind of no in between. Like, is this Chernobyl or just a clean energy source where you don't really have that downside risk with solar? So I get it, but yeah, I think bureaucracy is more of the issue in the US rather than and I guess sentiment, but it's too hard to build things here. I don't know if you guys have thoughts on that too, but
Don't forget Fukushima.
yeah.
Yeah, I guess
Yeah.
like maybe a counter argument to that. It seems like and again, I'm not an expert, but like small modular reactors, I believe is the
Mm,
term. People are bringing those
Hmm.
almost on site. I've seen a lot
mm,
of talk about that with more regards to data centers and powering data centers and
Hmm.
how they can move off the grid a little bit more.
yeah.
It
Is
seems to
that
be a
this?
very niche product or niche solution, but yeah.
Do
Right.
submarines use modular? I know like nuclear submarines, like yeah, yeah, they use SMR. Okay, so using what they would use to power a sub
Yeah,
in
so I've
data
seen a lot
centers.
of talk about that recently, and yeah, they're able to like ship it prefabbed already onto the site. So I'm not entirely sure like the specs on those things. What's the type of output, but what the the horsepower, what's the horsepower on that bad boy?
Yeah,
But yeah, that's
just
there's
got under the
definitely
hood.
a yeah, what's under the hood. There's definitely a need for localized power sources. But yeah, if you're able to get around the local regulation or bureaucracy, it sounds like you're able to get stuff done quicker.
Yeah, I think people would stomach that more. It's also like I wonder how much of it is just like a an eyesore to people seeing like nuclear power plants. It just feels dystopian visually, like that giant silo.
Very,
Um,
very Simpsons-esque.
yeah, yeah. I mean, yeah, The Simpsons are maybe why we don't have like clean energy today. They've ruined it for us. But
One one thing
and oh yeah.
I would add in there about energy because I can't remember how many years ago, maybe 15 years ago, thinking energy would just keep going up because people would need more energy.
Hmm.
But there is kind of a supply demand frontier kind of mentality to it too, where like the more expensive it gets, the more people seem to be able to find it or to find ways to produce it. And so energy never really, at least in the last 20 years, hasn't really done well in the market because there's always more. They always find more. There's always a way to get more. Um, it's surprisingly not as limited as you would think.
I don't
Yeah.
know. The nuclear, I think there's a nuclear ETF. I was thinking about buying it. Ooh, down 6.5% today. But it's like
Bad timing.
uranium and nuclear ETF, like NLR. And their chart was like what are they up? Like in the last like couple of years is like pretty significant. I think that's like the data center build out. Yeah, like
Yeah.
66 April of 2025, currently at 143. So doubled in the last year. So I mean, I guess it depends on the energy play. I mean, hey, even AES, I got like a 70% return
You,
until BlackRock
Well,
came in
it
and did
depends. What
18%.
it is, I think what it is it depends on the technology, right? Because what happens is, I don't know if this will be true forever, but what happens is that the prices go up, and then technology allows for greater output from somewhere uh, at higher prices,
Yeah.
and so it ends up kind of continuously moving it away from you. That scarcity, you know.
Yep.
Um,
Like
yeah,
mining.
you,
Necessity is the mother of invention, they say, right? So when you're
you
constrained in one level, then you look for opportunities to increase the efficiency.
you
So,
know,
Scarcity doesn't
I,
exist.
yeah, what,
oh,
what's that?
last note on that uranium. Michael Burry was pitching uranium probably about 3, 4 years ago. So
Oh, really?
looks like he was ahead of
Dude,
that trade.
he's
I'm
early
bullish on.
again.
Dude,
Right.
people talk love to crap on Michael Burry. I think this guy's right more than everybody says like he's called 30 of the last two recessions. But like I don't know of anybody who's like gone the next step and been like, where was he wrong? Like
Yep.
what can you name the 28? Because I can't. Like I don't know.
Right.
It says here, Google quote Google Finance. I'm playing around Google Finance right here in the background. February 2021, Burry first gained significant attention for bullish stance on nuclear energy. Shared a tweet.
Yeah.
Yeah. All right, we need to move to next topic, which is on AI. So, Eric, there's a lot going on with Anthropic and OpenAI and everything they are doing in terms of the deals with the federal government. For someone who is joining the news recently, like Can you help get up to speed on what's going on that aspect? Yeah.
Yeah, so much is going on, even just in the past 4 or 5 days. It's hard to keep up. But most recently, I believe it was Thursday night, Friday night. Anthropic was kind of butting heads with the Pentagon and the administration because they had some stipulations with the government using their Claude model. They didn't want I forget the exactly here, but they didn't want like fully autonomous weapons. And then there was one more against some of the
Privacy.
data use. Yeah, I think it was privacy. And so OpenAI, well, before OpenAI stepped in and got that contract, Anthropic was labeled a supply chain risk, and the government was going to come after them, essentially because Trump and his cabinet was not happy that they weren't going to get their way. So OpenAI was able to step in, and then some interesting market news I've seen since then. OpenAI. Like removal of the app is up about 300% the past few days. And then Claude is now the number 1 free app downloaded on the App Store. Shout out App Store. And so there's a little bit of a dichotomy there between who won that and who won that contract, and maybe who's winning the public opinion. But
Yeah.
Sam Altman, I heard today, he had a all hands meeting, and he basically said that we still have some safety guardrails here, so the government's not going to have a complete control over the OpenAI model that they're using. And on top of it, the way they pitched this was, if we don't step in, they're going to go with XAI, and XAI is essentially going to have no guardrails on their model and how it's being used. So it's kind of very interesting there, the play between OpenAI and XAI, and the history behind there, and kind of the administration, what's going on behind the scenes. Yeah, I also have a slide deck too I made in the past hour. If I'm able to share the screen, I have some more stuff I want to talk about. That's just the brunt of it. But there was a software disruption and market sell-off even before the Iran invasion. So let me
I'm
see if
down
I
to
can
talk
share my
about
share my screen here really quick.
Are you able to share it?
that.
Let's
I don't
see.
think it's
Can you see my
enabled.
Oh,
request?
wait. Hold on 1 second. Yeah.
Let's see if this works.
You could just hold an iPad in front, no
Yeah.
bullshit.
Are you able to share it? I clicked the allow.
All
Yeah.
right. Can you
Okay.
see
All
that?
right.
Looks,
Yeah. Yeah. Yep.
Wow. All right. Is that working?
looks great.
Yeah. So AI and the macro economy. Yeah. It's very high tech.
Should open with this.
Spoiler alert, spoiler alert. I'll just lead with this. This was Claude. Yeah, I was testing Claude on PowerPoint today. So I'd logged in about 6:30 and I gave it some prompts, and I knew where I wanted to go with it, so I just kind of guided it along, but kind of putting this conversation into PowerPoint here. So yeah, obviously, like Anthropic released a bunch of products the past month, which really sold off software stocks. The ETF is down double digits, February alone. And then big news last week is, Block laid off about 50% of their workforce. They blamed it on AI. That's another theme. And then AI investment continues to be strong. OpenAI raised about $100 billion, I believe, last month, the end of February. Um, so there's definitely still investor demand for that paper. And then something that Claude added that I guess I may have missed, but earlier last year, the Fed kind of started to point out that AI is probably going to lead to further unemployment, and we'll see how that wraps up. But I played around with it here, and I said, like, can you overlay the product releases of Anthropic and the software ETF and the Nasdaq? And it's pretty impressive here what it can do. But as you can see, we're over here today, and yeah, software ETF is down about 13-14% since then.
A great visual.
Pretty great visual. Created
Almost
this
as
in
good
a
as the
few
McRib.
minutes. Almost as good as the McRib Bitcoin correlation there. But I had it pull in some software providers. They called it the SaaS apocalypse. I don't know if Claude found that term anywhere, but yeah, Intuit's down 34%, ServiceNow down 28%. Salesforce is a big one. They're trying to make a push into agentic platform, but market doesn't think they can do it. Unity is one I had heard in the news come through. I'm unsure if they just if the market feels that you can just vibe code video games now and you won't need that. MongoDB, I believe, reported today. Today's, I believe, what's March 3rd, March 4th. So that one I just had to add on there. So it's pretty interesting to see, just the power behind it. And then the block, it's very unfortunate when you see, half of your workforce result in a 24% jump in in the equity. I think that's pretty draconian there. It's kind of sad to see, but the bear case there is like they've more than almost tripled their workforce since pre-COVID. Cash App, Block, so kind of consistent with the tech layoffs here. Maybe there was a little bit of overhiring, or maybe the AI excuse is an easy one to cut costs. And then this one just kind of covers what I mentioned before about some equity raises in OpenAI, and Anthropic, I believe, had one as well, but it didn't pull it in. So it's kind of interesting to see what Claude thinks we should talk about here. Bull bear case. And then yeah, the Fed one was pretty interesting. I had it like date, like can you add dates to what you're talking about here? But yeah, pretty recently they're talking about AI affecting the workforce, which as we've seen in recent job numbers, the growth has been mostly in healthcare, and yeah, tech and other service industries remain under pressure. And yeah, I believe that's the end of it. I didn't get to see this before, but it tried to kind of make some cool slides here at the end. So ultimately, the market's still trying to digest. Let's see, how do I stop sharing? There's where I
Oh,
dog the street.
actually, I wanted to go back to one of your slides if you're willing.
Yeah, let me go
Hold
back
up.
here. Which one?
Well, yeah, I think like one, this is bullish for Anthropic. This looks great. They're gonna do AI podcasts in the future probably, and just hey, give me a market review of the last week, or replace New York Times Daily and acquired. But I wanted to see I like that view of the stocks that have gone down and the percentage it dips.
Yeah.
I know I mentioned Citrini's report later on, and I know I mentioned in our chat, but for context, my opinion on the Citrini research was that it's a pretty overblown, bearish, like doomer fan fiction. But the biggest case that I thought was like, that doesn't even make sense, is like DoorDash. Like, oh yeah, we're gonna use Claude to replace a driving network. And it's like, well, these are drivers who have signed up to work for this like contracted employment, and the restaurants are partnered. So this is more of like a logistics network that is like legally created. It takes a lot of effort to make these kinds of partnerships. And so for that, I was out on that. But I'm wondering if the market is being like more punitive on some stocks, or just like this blanket sell off. Like, you see these guys are all, other than Microsoft, in this like 20 to 30% dip range. And my thought is like some of these, it's more deserved or more replicable than others. So I think it will take some time for the market to really recognize which of these have real moats. Like when I look at Salesforce, I work with a CRM every day, and the last thing I want to do right now is like migrate to a different like CRM platform and database. Like, it is a massive undertaking. Like there are whole companies that are just for migrations, and maybe that gets replaced to a degree, but
Yeah.
data integrity matters so much. And I don't think like when you're talking billions of cells of data, that it's at that point yet, or if the token cost would be even worth it. So I
Yeah.
think some of these are a
So,
little more sticky of
so,
solutions. So it might be a good time to buy, but I'm not sure which ones to buy into. And I'm not, other than Microsoft, I'm not a prior holder of any of these. So Unity's interesting. I don't know if people like, you know,
so,
yeah.
so, so Terry, taking a step back, I just wanted to hear Dave's opinion because he's a software engineer too, and uses this day in and day out. So, Dave, as you see these models evolve, do you see a threat to SaaS models in the future, in terms of how these AI generated softwares could replace? I would love to hear because you're
Yeah,
using these firsthand. So yeah.
we talked a little bit about this at work. We interviewed somebody that brought it up, and he was kind of shot down by my coworkers. My coworkers' feeling is that the the Square layoff was kind of, they missed the other 2022 bandwagon, and they just wanted to lay people off and pretend that they're an AI company, which I totally see. Um, in terms of like the effects of Claude and Anthropic specifically on coding, I would say it is a game changer. I don't think that a lot of these entrenched companies like Salesforce, I don't think are going to go away, but they don't definitely don't need as many people. So it's always hard to know, you know, in the case of Square, how many of those people were really essential. I remember when Elon Musk took over Twitter, and this is before Claude, and he laid off 75% of the people. Everybody was It was very political. Everybody was talking about it. And as a software engineer, I thought that's about right. I feel like 6,000 of those people were already dead weight.
Mm.
So that
Yeah,
was
but
my opinion before Claude.
yeah.
So, so I think that, yeah, you're going to see these same companies survive, but they're going to have far fewer people. That said, it's always hard to tell because you can support a lot of dead weight. I see a lot of dead weight every day in tech. People hire their friends or whatever. When you're making money hand over fist, you do a lot of hiring. So I don't know how much overall impact long term it's going to be. Definitely, you're going to have fewer people, fewer software engineers. Software engineers are the junior level of software engineers is going to go. I mean, completely gone
Mm.
in the next few years for sure. You're going to need like boot camps are going to be totally worthless
So
because you just
how many
don't have the
years?
knowledge
How
for
many
what.
years? Like you said, few years. Like are we thinking about like three
Crystal
years or
ball.
5 years?
3 years max. I
Okay.
mean, there's certainly companies that are going to be slower to adjust or to know how to use it or to know how to hire for it. Um, the big thing about it is it really amplifies you. So actually, there's a funny story. I saw this in like a TED talk. It talked about. I wish I had the drawing right here, but it had a graph of like people who know things and people who get things done. And the most valuable
Mhm.
people know things and get things done.
Yeah.
And then the second most valuable people are people who know things and don't really get things done, or they get a lot less done. And then you would think maybe what the next one is, but actually the next one is doesn't know anything, doesn't get anything done. And there's a lot of people like that in tech that just kind of are friends of somebody, personality hires, because you're making so much money hand over fist, you can afford a lot of dead weight. But the worst people are people who don't know anything and get a lot done. They're just constantly causing problems for the rest of us. So Claude really amplifies that. You can get a lot done.
All right.
And it used to be that you would train people a lot more and be like, okay, that person's junior, they're going to mess up. But now I think the amount of damage they can do is much larger, and the amount of productivity I can have is much larger. So they don't really need them anymore.
All right. Cool.
Yeah.
That's a cool presentation, Eric. Thanks for sharing that. Now, I would like to move to our next topic, Dave's favorite topic, that is tariffs. So I know, Dave, you had some thoughts on how tariffs could impact U.S. economy in general. So yeah, feel free to share your thoughts, ideas, what we should be doing more and what we should be doing less. So interested to hear your opinion.
Okay, well, I would say tariffs aren't my favorite topic. In the future, we'll have to talk about inflation. That's definitely my favorite topic. But tariffs, I think, have become very political as a topic. People will basically align on tariffs based on their opinion of Trump. Do you like Trump? If you do, then you like tariffs. If you don't like Trump, then you don't like tariffs. And I just think that there's a wider history to tariffs, both in the US and abroad. Um, ta Tariffs are one of many tools, that the government has, and they have been used to bolster domestic industry for a long time or to change trade balances. They were used to fund the United States government for a long time before the Civil War. I think the Civil War was the first time we had an income tax, and then the income tax was pretty low until World War II. Um, but that said, obviously Trump is not a genius, and so the Trump tariffs are definitely a strange mutation. He kind of realized that he had a lever to pull, and then he got very excited, right, pulling that lever. So I think I think that it remains to be seen the overall impact, right? And we see this a lot. People were really dooming last year about, I think about in August, about shortages, et cetera. Um, it just kind of never materialized. So I think that tariffs in this way, at this level, in this bizarre, erratic nature that we live in, we really don't know what they're going to do. I think a lot of the models don't work as well as they used to traditionally. So yeah, I guess that's my take on tariffs.
Mm. Said inflation's your favorite topic, but I think I mean that's what comes to my mind immediately when like you said that like it's we're not sure how it'll play out, and I fully agree with that in terms of like the recent Supreme Court decision and where the refunds going to go, how that's going to play out. Is it 10% now? Is it 15%? What's he going to do next? I agree. I have no
What
idea
will it be
on the
Monday?
on the future. Like yeah, and I think like the
Yeah,
10% has it's like a 150-day cap on like the specific legal route he went for that one. So it's like, that has a 5-month limit on it. So are we going to
that's right.
see congressional approval for tariffs in the future? But now we've got 175 billion, I think it is, in tariff refunds that, at a 90% pass through to consumers. From what we saw the other day, 90% paid by consumers, and then 175 is legally due to the corporations. I think that's a big, you know, that's a big transfer of wealth, which legally it goes to the corpse. They paid it. But with that level of pass through, it's hard to kind of stomach or justify tons of
For some
legal
reason, I
battles.
don't think they're going to pay it. I don't know. I don't think the
Who,
government is
who
going to.
they
The
did the
the
corpse did pay it. It's been
the,
paid.
the government,
The
I thought
corporations paid it. I just don't think the government's going to pay it back.
yeah, it'll be
I,
tough to get them to pay that back. I saw a recent data point last night that said every month that the government waits to pay back the corporations, it's about $700 million in interest per
Makes
month.
sense. Yeah. I mean that's a lot of money in limbo. And I kind of get Trump's take on the that I saw an opinion piece in the Financial Times on this. But Trump's immediate response was like, "Why did the court said it's illegal, but said nothing on what do we do with the money?" Like he's like, "Oh, they could have put a sentence in there at least, like, hey, who's this go to?" But there was an interesting take. I'm forgetting the author, but I'm sure if you look Financial Times, you know, Supreme Court decision on the tariffs, the main argument is that this was appealed to the Supreme Court. The prior judge had already said, hey, this is illegal. But then the Supreme Court sat on this for 7 months before taking the case on. So there was a 7-month delay where these tariffs were being collected. If they would have just said, hey, we're not taking this case, like this isn't our ball game, we are agreeing with this standing that these are illegal, it have been decided 7 months ago. But instead, we have this like theatrical event of like, we want to decide on the Supreme Court level. And now we have 7 months more of these tariffs that are now in limbo. So instead of 175 billion, you have still be a few $1 billion, but it wouldn't be 700 million in interest while we're trying to figure this thing out. So it's pretty rough. Like whatever your thoughts on tariffs, this is a tough situation for Trump and everyone in America. More worried about them than his personal things. But yeah, it's
so
Yeah, I don't
wild.
know
so
why. I don't feel like they're going to pay. I feel like they're going to lose all those lawsuits.
Yeah, they'll
I
find
just have
some
a
kind of legal, but the
Yeah.
lawsuits are from the corporation saying, "Hey, we need to demand this money." You think all
Yeah,
the corps are going to lose all their
so
lawsuits?
so so so
I
far
do.
have we seen any good effects of tariffs because one of the main reasons is to bring manufacturing to US. Did anyone notice any uptick in US manufacturing as such?
Not in my
I know that
backyard.
I
I think it's a little early because those kinds of things don't really happen overnight. Um,
Yeah,
you
my
create a favorable environment and things grow in that environment.
Yeah, my team had been doing some research for our project on why we should remove tariffs, and we essentially found that the offshoring remains offshore. It just gets diverted to other countries. What happened the first time around with Trump and his tariffs, and it definitely happened again this time.
I think
so
another issue with like trying to make manufacturing via tariffs, like it makes sense from like an elementary understanding of tariffs, but it's like, what are you putting tariffs on? If you put tariffs on food, okay, then we have food in the States. So or, okay, let's put tariffs on oil. Hey, we produce our own oil. But when you put blanket tariffs on China and you are like, oh, we want to produce manufacturing, but the means of production are machines purchased from China. You now are like, hey, I want to start a factory and I need to buy these machines. And the cheapest, best tech for production is in China. And now you've got this massive tariff to order. Like, you can't just
Yeah.
create a factory, hammer and nails, make it happen. Like, you
Well,
need
I think
these high-end machines, and they come from the very countries we put tariffs on. So I think if you would have had like you know, these are the exempt things. We'll even have like a, free trade on all means of production. We could have seen some positive manufacturing effects, but
the
blanket tariffs are never going to work
it's
for
hard
uh,
to
China.
know. I
uh,
think I think a lot of that is from basically increased globalization over the last 30 years, right? So we've kind of outsourced a lot of things and we don't have the same infrastructure that we used to have. And honestly, I don't know that manufacturing will ever come back. There's a lot of reasons why it can't, but I don't I don't see the same. Definitely, I don't see the same doom cycle that other people do when it comes to tariffs. I don't see the same like. There's no way that you can produce that in America.
Well, yeah, I think it's just like you need to incentivize it properly. Like I do get the concept of like, oh, put a tariff on this good that's only made abroad and then it will be made in the US. But like when it is a manufactured good and it requires machines of production, like you need to buy those machines. And so you're not incentivized like the exact tool, the exact lever that Trump has pulled to bring manufacturing back is also a bottleneck, full stop. I cannot buy these materials to start my factory. So I think it actually could have worked if they were more picky about like these are free trade, these are 50%, you know? But yeah, I don't think it was a long time and it didn't. I mean, it's a long time for the impact on American people, like having to pay more for stuff, and then there was no manufacturing benefit. It hasn't been a short amount of time. He's been trying this since like 2018 when
Well,
he's
it's
had a 4-year gap, but yeah.
well we did have tariffs in 2018,
Yeah.
but I don't feel like we saw great negative impacts, right? And those have been sustained.
I
And
What
then we had larger
if
tariffs in
you
May
if you
Dave, do you have any examples? I'm just trying to recollect.
of manufacturing growth in the United States.
Yeah, in 2018.
Well,
Uh,
he didn't say there was manufacturing growth, just we didn't see
J-
massive negative impacts, which I
yeah,
disagree with, but that wasn't what he was saying.
Okay.
yeah. I think again, it's something that we have been looking at for a long time and kind of letting happen. And in terms of globalization and outsourcing both labor and manufacturing, uh, outsourcing as much as we can, right? And I do think that that is not a great road to just keep going, right? And many people have talked about the race to the bottom and level playing field and these things, trying to compete with people who are paid very little. Um, I'm not saying that it's I'm not saying that it's going to work. But
Right.
what I am what? Why? Is that what you said?
I think he said right.
Oh right, yeah. I'm not saying it's going to work. but I do see like a reason and an attempt at fixing it, and I don't see the explosive negative reality that I hear a lot.
No,
Got
I
it.
think like the explosive negative reality is a day-to-day thing. Like you're paying 15-20% more on day-to-day goods. That's not an explosive reality shift when you have a decently comfortable life, but it's a pretty explosive reality shift for the poorest of individuals. And it is a gradually damaging financial reality for even moderately wealthy
Yes,
people. Like,
and I
so
think
All right.
it's not an explosion. It's
I
just a
guess
All
kind of shitty.
I guess I would
right.
counter that by just saying that and then I don't have I'd have to look deeper, but the hope is that you pay 15 to 20% more and that you move some of that gradually that production back.
Got
Yeah.
it.
And
Got it. Uh,
yeah,
yeah. All right. All right. So we are running out of time. I mean, this marks the end of All Things Macro episode one. This episode is recorded on March 3rd, 2026. So thanks everyone for joining. These are excellent thoughts. We'll try to keep it weekly and we'll see how it goes. Thanks
Yeah.
everyone for joining. Yeah.
Great chatting,
Cool.
guys.
Thanks. Yeah.
Great chat.
Be
See
Have a
good.
ya.
good
Yeah.
one.
Yeah. Bye. Bye bye.